For CIDB introduction, CIDB Bank Berhad is a major banking institution in Southeast Asia and a core part of Cimb Group Holding Berhad that based in Kuala Lumpur, Malaysia. Cimb established in 1934 and rebranded in 2003, where Cimb has grown into a regional financial leader offering services like consumer, commercial, investment and Islamic banking, as well as asset and private banking. Cimb also operate widely across ASEAN countries, and it also has a presence in global market such as China, UK and the US. Known is for leadership in Islamic banking, Islamic finance, and they also have their digital platform like Cimb Kris and Octo. For Cimb Banks Berhad, their vision is to be the leading focus in ASEAN bank, supporting customer and communities.
Okay, next I will explain about Cimb Bank Berhad product and services. Okay, the first one is consumer and digital banking. It offer regular and Sharia compliance banking like deposits, loans, credit cards, wealth management, investment, remittance, and foreign exchange for people in Singapore, Thailand, Cambodia, Vietnam, and also Philippines. The features is easy access to many financial options, but it also have a weakness, which is much struggle to keep Sharia rules consistent everywhere. Alright, so number 2 is a commercial banking. It provides money and cash management like loans, treasury, and structured products to help for a small and big and medium businesses. The features is to help businesses grow with a flexible loans, but the weakness is hard to manage different types of clients. So number 3 is transaction banking. It offers cash management, trade finance, supply chain financing, online banking, and securities for small businesses, big companies, and for governments. The features is makes transaction easy to improve cash flow, but the weakness needs strong digital system. Right, so for the number 4 is a wholesale banking. It gives services like capital market help, advice, mergers, trade finance, and risk management for big companies and also governments. The features is to support big financial plans. It have the weakness, which is wholesale banking has a high cost and it has a strict rules. The last one is Islamic banking. It offers Sharia compliance services like financing, sukuk, investment banking, bank takaful for individuals and institutions. The features is to meet ethical banking needs. The weakness is the market is smaller than regular banking. Okay, next I will explain about impact of digitalization. There are 3 impacts. The first one, impact to customer behavior. So people now use online banking more, accessing services like payments and investment anytime with apps. This is convenient but might reduce face-to-face trust. So number 2, impact to banking operation. Digital tools and AI make transaction and support faster and cheaper. However, it needs big investment in security to avoid hacks. So number 3, impact to financial landscape. Digital tools help the bank reach more people in Southeast Asia and include more in finance. It also brings competition from fintechs, pushing the bank to improve. This changes the financial world, but at risk like privacy issues and type dependence.
Hi, Assalamualaikum warahmatullahi wabarakatuh. To our dear lecturer, Dr. Nur Hidayah. My name is Nurul Izzah binti Haji Muhammad Yusof. And today I will be presenting about a profitability analysis of Cimb Bank as part of our financial analysis project. What is profitability ratio? Profitability ratio measures a company's abilities to generate earnings relative to its revenue or operating costs. This ratio helps determine how effectively a company is utilizing its resources to generate profit. Let's take a closer look at Cimb Bank performance for fiscal year 2023 and 2024. For net profit, we can see an increase from 6.983 billion in 2023 to 7.728 billion in 2024 from Cimb Financial Statement Report. Operating income also grew from 21.007 billion to 22.301 billion. This improvement is reflected in the net profit margin. In 2023, CIMB net profit margin was 33.2%, calculated as 6.983 billion divided by 21.007 billion. In 2024, it increased to 34.66%, become more efficient at generating profit from its operating income. Next, spread. What is spread? Spread is the difference between what the bank earns from loans and what it pays on deposits. As you can see on the slide, in 2023, CIMB Bank earned 3.73% more on loans than it paid on deposit. Meanwhile, in 2024, the spread increased to 3.82%, meaning that CIMB Bank showed they have been improved profitability from lending activity. Now let's take a closer look at two important profitability ratio, which is return on assets (ROA) and return on equity (ROE). In 2023, CIMB Bank recorded net profit of 1.983 billion and total assets of 717 billion. Using the formula ROA, which is net profit divided by total asset 6.983 billion divided by 717 billion times with 100% will be equal to 0.97%. So, in conclusion, CIMB Bank reported ROA is slightly higher at 1.04%, indicating a modest improvement in how well the bank uses its assets to generate profit. Next, return of equity. Using the formula return of equity ROE, which is net profit divided by shareholder equity, we can find in 2023, 6.983 divided by equity 65.200 times with 100%, we will get 10.7%. Meanwhile, in 2024, with equity rising to 69.2 billion, we can find ROA, which is 7.728 divided by 69.200 times with 10%, we will get 11.17%. This increase shows CIMB Bank generate higher return for its shareholder year on year. Both ROA and ROE show an upward trend, reflecting CIMB Bank's stronger profitability and more efficient use of both asset and shareholder equity in 2024. This improvement indicates good financial health and strong management performance. Now, let's move on to another key profitability ratio, which is net interest margin or NIM. Net interest margin tells us how effectively a bank earns from its interest-generating asset like loans and securities. It's calculated using this formula, which is interest income minus interest expenses divide average earning asset. In 2023, CIMB Bank reported interest income 28.473 million, interest expenses 13.856 billion, net interest income 14.617 billion, and average earning assets 662 billion. Plugging this into the formula, 28.473 billion minus with 13.856 billion divided by 662 billion times with 100% will be give us a net interest margin of 2.21%. In 2024, the figures improved slightly, show that interest income 30.184 billion, interest expenses 14.787 billion, net interest income 15.397 billion, and average earning assets 697 billion. So, using the same formula, 30.184 billion minus with 14.787 billion divided by 697 billion times with 100%. Again, resulting in a NIM will be 2.21%. This consistent net interest margin of 2.21% across both years show that CIMB Bank has maintained steady profitability from its core lending and investment activities. It highlights the bank's ability to control funding costs while earning stable returns from interest-bearing assets. In summary, CIMB Bank profitability ratio including net profit margin, return on assets, returns on equity and net interest margin all indicate solid financial performance and consistent earning efficiency over 2023 and 2024. That's all for me. Continue to the next slide. Thank you.
Liquidity ratio measures a company's ability to meet its short-term obligation using its current or liquid assets. It reflects how easily a company can convert assets into cash to pay off debts due within a year. First, loans to total asset ratio. This ratio measures the proportion of a company's or bank's assets that are funded by loans. It reflects how reliant the institution is on its loan portfolio to generate returns and manage its asset structure. For CIMB, this ratio remained relatively stable between 2023 and 2024, increasing marginally by 0.01%. It showed that 58.5% of CIMB's total assets are tied up in loans, indicating a strong lending activity. However, a high loans to asset ratio also implies less asset liquidity, since loans are less liquid than cash or short-term investment. Conclusion: no significant change. CIMB maintained a consistent lending strategy. Second, liquid asset to total asset ratio. This ratio measures how much of a company's total assets are held in liquid form, that is, in cash or easily convertible to cash, within a short period. Indicates the company's ability to respond quickly to unexpected expenses or market shocks. For CIMB, this ratio dropped by 0.82 percentage points from 2023 to 2024. It indicates that CIMB is holding less cash and short-term liquid asset relative to its total asset. A declining liquid asset ratio could raise concern about short-term liquidity risk, especially in periods of financial stress or cash demand. Conclusion: liquidity position slightly weakened in 2024.
Assalamualaikum. My name is Muhammad Akmal bin Muhammad Amin. So my part is asset quality. So before I jump to calculation, I want to explain on the asset quality itself. So asset quality is a crucial aspect of a bank financial health, because it reflects the risk associated with the bank's loan portfolio and other assets. So meaning strong asset quality suggests that a bank's loan and investment are likely to be repaid, while poor asset quality can lead to default and financial instability. So in asset quality we have three calculation, which is non-performing loan, loan to deposit ratio, and then the last one is deposit to shareholder funds ratio. So for non-performing loan, in 2023 the NPL ratio was 2.7, and then in 2024 the NPL ratio improved to 2.1%. So it means the lesser the ratio is, the better for the bank asset quality. In this slide we can see the decrease in the NPL ratio from 2.7 to 2.1% indicates that CIMB Bank has improved its loan quality with fewer loans classified as non-performing loans. This suggests better credit risk management and a healthier loan portfolio. And then the second one is loan to deposit ratio. The ratio for in 2023 is 88.59%, and then in 2024 the ratio slightly decreased to 88.29%. So when I check the benchmark in the loan to deposit ratio, the optimal range was 80% to 90%. So as we can see for CIMB, the ratio is likely below 90%. So it indicates that CIMB Bank has maintained a balanced approach to lending, ensuring that it has sufficient deposit to cover its loan. So the last calculation will be deposit to shareholder fund ratio. So in 2023 we can see the ratio was 728.31%, and then in 2024 the ratio was increased to 739.84%. So the increase in the deposit to shareholder fund ratio suggests that CIMB Bank has a strong deposit base, which can be used to support lending and other financial activities. A higher ratio indicates a robust ability to attract and retain deposits, enhancing the bank's financial stability. So in overall conclusion, for asset quality, I can say that the asset quality of CIMB Bank Berhad has shown improvement from 2023 to 2024. The reduction in the NPL ratio indicates that they have better loan performance and credit risk management. The loan to deposit ratio remains within the optimal range, ensuring a balanced lending strategy, and the increase in the deposit to shareholder fund ratio highlight the bank's strong deposit base, contributing to its financial stability and ability to support growth.
For capital adequacy, is the minimum amount of a capital bank that bank must keep to protect depositor and stay financially stable, and they also must act like a safety cushion to help the bank handle the losses and avoid to going bankrupt. The capital adequacy ratio (CAR) is a key measure of a bank financial strength. It compares the bank capital to its risk-weight asset, or we know as loan and investment that carry risk. Next, this is regarding about risk-weight capital ratio and core capital ratio. To get the answer for risk-weight capital ratio for year 2023 and 2024, you need to use the formula, which is capital base divided by total risk-weight asset times with 100%. So for 2023, the percentage that we got is 10.16%, and for the year 2024 is 12.62%. Moreover, for the core capital ratio, to get the answer for the core capital ratio is we need to use tier 1 capital divided by total risk-weight asset and times with 100%. So in order to get the answer for the year 2023, we got 15.13%, and for the core capital ratio, we got for 2024 we got 15.25%.
So management soundness is determined by looking at the quality of management in controlling expenditure and operating expense of each bank. Issues related to this include how banks control the total expenditure in relation to total income and level of operating expense out of the total expenditure. The non-quantitative aspect will include management flexibility to changes in circumstance, compliance to norms, technical competence, leadership ability, and administrative ability. Alright, so how to calculate the management soundness? Okay, so for CIMB Bank Berhad, based on the formula admin expenses over total expenditure. So we need to retrieve the financial figures for administrative expenses and total expenditure from Cimb Bank financial statement for 2023 and also 2024. Alright, so what is the meaning of administrative expenses? Okay, it refer to overheads or selling, general and admin expenses. So how about total expenditure? Total expenditure for a bank is not the standard line items like manufacturing companies. It typically refer to the sums of all expenses incurred from the income statement of Cimb Group Holding Berhad. The main expense categorized are: first one is interest expense, number 2 is fee and commission expense, number 3 is overheads, which is administrative expenses, number 4 is expected credit losses, and the last one is taxation and zakat. Okay, as you can see in my slide, I have made a calculation. So for 2023, the amount of overheads is 9,865,076,000. For the total expenditure is 28,649,357,000. So these two amount was divided, and the answer is 0.3443, and I convert to the ratio, and the amount is, and the percentage is 34.43%. Okay, for 2024, the amount of overheads is 10,420 million, and 231,000. For the total expenditure is 30,389,000,000 and 252,000. So I divide these two amount, and the answer is 0.3430. Okay, so I change to the ratio, and the percent is 34.30%. So the conclusion is, this ratio indicates that for every 1 ringgit of total expenditure, approximately 0.34 was spent on administrative expenses in both 2023 and 2024. A lower ratio generally suggests better management, efficiency in controlling administrative costs relative to overall spending. In this case, the ratio remained relatively stable with a slight decrease in 2024, suggesting consistent management of administrative expenses within the context of total expenditure.
After all the calculation that our team made, so we can conclude that for Cimb Bank Berhad has demonstrated a robust and stable financial position across various metrics. The bank profitability ratios indicate effective utilization of resources to generate profit. For liquidity ratio, it shows a consistent lending strategy, although there was a slight weakening in the liquidity position in 2024. As for asset quality, we can see that asset quality remains strong because of there is improvement in the NPL ratio and a balanced loan to deposit ratio. And then for capital adequacy ratio, we can see this also has significantly improved, and then overall showcasing the bank financial strength and ability to absorb loss. Last but not least is management soundness ratio reflect efficient administrative expense management.